you very much. And good afternoon, everyone. It's a pleasure to be back in person again, at least for those in the room. It's good to see everybody. And welcome to everyone out there and across the state listening to us. I want to start out before we get into things, looking at our contact information. You can always email us or give us a call. And you might notice there's a name missing from that. Susan Gordon, who I know worked closely with a lot of you over the years. She's still with the State Board of Accounts, but she's in a different area now. She's been tasked with a different assignment. Excuse me. And to kind of explain that, we have directors over libraries. Susan and I were directors over libraries. We have directors over all the units that we audit, schools and cities and towns and special districts and counties. But we never had anything over state agencies. We never had a director or two over the state agencies. And so the state agencies that we audit really didn't have anywhere to turn for questions or direction. So the state examiner decided to develop an area within our directors unit that was specialized in state agencies. And Susan and one of our other directors have been tasked with starting that from the ground up. So it's not just as easy as Susan, starts taking phone calls and emails from the different state agencies. She and the other director are looking at each agency, how they operate, what their internal controls are, and what they do, and trying to see if there's a way that that we can come up with for them to operate more efficiently. So it's a big project. We think that over the next couple of years, there may be one or two more of our current directors making that move over to the state agencies. And I think the goal is by the time they're up and running at full speed, they'll have 4 or 5 directors specializing in those state agencies. So while Susan's no longer involved with library and government, I'm happy to introduce someone who is, Mike Crowley. Mike comes to the directors unit after having worked in state assignment audits. He also spent some time in the field in the northern part of the state. And he's going to start out concentrating on libraries and special districts just to get his feet wet. And then he'll probably be helping me on cities and towns. So you might see an email come from him, or when you call, you might talk to him if you haven't already seen an email or spoken to Mike. But again, you can email libraries@sboa.in.gov or give us a call at 317-232-2513. And as you can imagine, Susan's been in this other role 5 or 6 weeks now. So our library inbox got a little backed up there for a while. So we appreciate your patience while we work through those and try to get calls returned and emails answered. So as we jump into the world of investments, we have to kind of prep that by talking about internal controls. I know it's everyone's favorite subject. You love to hear us talk about internal controls, and you've heard us say it countless times. But let's just take a little overview of internal controls as it relates to investments. By definition, the purpose of the internal control process is to provide reasonable assurance that the mission and objectives of an organization are being met or achieved. That involves producing reliable financial data, ensuring accuracy and timeliness in reporting, and promoting compliance with laws and regulations. And of course, we're all concerned with that. So the first step in kind of developing or designing internal controls is to figure out what your objective is, to kind of define your objective. After all, since internal controls are designed to help you achieve those directives, you need to know what you're shooting for. You need to have a target in mind. Objectives for investments can be broken down into 3 categories: operations, reporting, and compliance. Operations deal with the effectiveness and efficiency of operations, including the safeguarding of assets. So as far as the topic of today is concerned, that first objective is to design controls for the safeguarding of your assets, specifically your investments. Now that can include cash as another kind of liquid type of item that you have. And obviously cash is less exposed to the risk of theft when it's in a bank, rather than when it's in a drawer in your office or maybe in your safe. If that bank is FDIC insured, it's less exposed to the risk of loss if that bank were not insured. And for those two reasons, that's why we have so many rules from our legislature involving the deposit and investment of public funds. Compliance is the adherence to those laws and regulations, including any of your local policies and resolutions. So many of the state laws on the deposit of public funds are designed to safeguard those funds, and compliance with the laws also achieves the safeguarding of the asset objectives. We're going to talk about many of those laws in the next few slides. Reporting is the third one. The reporting of investments in the records and the financial statements should be materially correct and supported by sufficient documentation. So in the area of investments, the safeguarding of assets and compliance with state and local policy and the proper reporting of investments are your key objectives. A complete internal control system is going to contain 5 components, the 5 components of internal control: the control environment, the risk assessment, control activities, information and communication, and monitoring. If you're not aware of those components, you might want to take some time to study those further. The Board of Accounts has a manual on internal controls that's available on our website, and it discusses each of these components and the 17 principles that go along with these 5 components. I'm not going to get into those today, but it's important to kind of know what those are and how they relate and how they are necessary to achieve a strong internal control system. You can also find there's video training on our website. A lot of you have already watched that, but if you've got any new employees involved in the cash process or the handling or access to public funds, you might have them look at that too. They need to look at that. So looking at the control environment, this component comprises the integrity and ethical values of your library, including leadership expectations. So this is also known as the tone at the top, you may have heard us say before. And this is going to be where your investment policies fit in that your boards can come up with. Risk assessment is the possibility that an event will occur and adversely affect the achievement of your objectives. In other words, think of it as like what can go wrong. In the world of investments, it might be that your investments lose money or interest rates go through the floor and you're not earning any interest anymore. Those are the kind of risks that you want to be aware of. Control activities recognize those risks, the what can go wrong aspect, and they provide a way to detect, prevent, or reduce those risks that interfere with the achievement of your objectives. The most common of these are reconciliations, the approval processes you might have, and segregating duties amongst employees and officials. So the question that you might ask yourself under control activities is what procedures can you put in place to make sure that the investment objectives are being met? Information and communication in the realm of investments, you need to know how you can use information available from external sources in order to make wise decisions for your investments, and how you can communicate those expectations regarding the achievement of your objectives. And then finally, monitoring answers the question, how do you know that your internal control procedures are functioning? You have to monitor those and look to see if you're getting where you are intended to go. And as we go through the statutory requirements, I'll try to point out where some of these components are addressed by statute. In addition to the statutory requirements, you should have policies and procedures established within your office to ensure that investments are in compliance with statute and your local policies. Those policies should include controls over the depositing, the posting of records, and the reconciling of the records to the bank statement and investment statements. In addition, you're going to need some policies to ensure that investment transactions, which you are going to include the purchase and the sale of investments, that those are posted properly. And that interest income is also posted properly. So part of your investment procedures should address the posting of interest. And we'll get into that a little later. Before we dive any further, I just wanted to remind you about the timely deposit of receipts that's covered in Indiana Code 5-13-6 that says you should deposit receipts the next business day once your collections on hand reach $500. And we've had questions before if that includes checks. So yeah, our position is if you've got checks and cash that total $500, that triggers you depositing that money that next business day. And deposits need to be made in approved depositories, and we're going to talk a little bit what that means. The timely deposit and using approved depositories all relate directly to the safeguarding of public funds. The expectation of compliance is part of your tone at the top, and it also serves as a control activity for you. So as we move into investments, I want to let you know that Indiana Code 5-13-9 is the source. It's the statute on investments for governmental units. And it's very heavy with words that are defined in 513-4. So I have a couple listed here, but there are a lot more, and I would encourage you to take a look at those. And part of the reason is if you don't know how the words are defined, then you can maybe misinterpret the requirements of that statute. Went too far, sorry. So first, let's start with the investing officer. That's the person that has authority by law to invest for the political subdivision. And that's in 513-4-16. That's normally your fiscal officer or your treasurer. Public funds are all fees and funds of whatever kind or character coming into the possession of any public officer by virtue of that office. And that's in 513-4-20. So that whole statute on the investments is going to talk about investing public funds. And we get some questions from time to time or confusion about what a public fund is. A lot of people think it's just tax dollars that you receive, and maybe it's not the donations that go into your gift fund. It's any money that comes to your library that once it's in the possession of the library, it's considered a public fund that you have to account for. You have that fiduciary responsibility to account for, and it would fall under these statutes. The fiscal body of a library is defined as the library board in 36-12-1-3. And then that fiscal officer is the treasurer per 36-12-2-22. And for our purposes today, I know there's been a lot come out recently in the last year or so about designating who your fiscal body is for DLGF and budgeting purposes. For investments, and as far as it relates to the Board of Accounts in an audit, we're looking at your board and not necessarily. So if we're talking about your board, we're talking about the board or the Board of Finance, I'm going to talk about here in a second. That's at your local level. That's not a county official or anything. So the Board of Finance is talked about in 513-7-5. And each library has one. The majority of the members of each Board of Finance constitutes a quorum for the transaction of business. Each Board of Finance shall hold additional sessions whenever necessary to discharge its duties and to accomplish the purposes of the statute 513-7-5 and 6. The president of the Board of Finance shall convene the board whenever requested to do so by one of the members or whenever necessary to the performance of the duties that are in that statute. Any meetings of the Board of Finance are just like meetings of your board. They're open to the public, and the records of the Board of Finance shall be subject to public inspection in accordance with 514-3 and 515-2. And the secretary of each board shall keep a record of the proceedings, which shall be approved and signed by the president of the board and attested by the secretary.
With your board on the secretary, they just have the director do that. So should I go back and say you have to have someone besides the director do the minutes for the board minutes?
The question in the room was, if a board of finance just has as their secretary, the library director. And I don't know that we would have any issues with that. Do you know the statute talks about the treasurer can't be the director. It can be a library employee or somebody else appointed on the board. It just can't be the director, but I don't think that holds for a secretary. So that would be okay with us.
I would also say, are you the elected secretary or they're just asking you to take
If it's an
minutes?
elected secretary.
Okay.
They just say, okay, I'll sign the minutes.
Yeah, well, that's fine. And actually, when we are doing trustee training, we suggest that the secretary does not take minutes during a meeting so that they are able to fully participate in any discussion. But yes, they would need to be the one to sign off on that. So, but it doesn't even necessarily need to be you doing the minutes necessarily, because you might want to take part in the discussion too. But a lot of libraries have some staff member come in and do that during that time. So.
Okay, there we go. Now we're going to talk about the designation of depositories for libraries. And how does that designation come about? Your board of finance is going to designate by resolution the depositories that each library is going to use. And those depositories need to be approved depositories. I mentioned approved depositories before. They're approved means that there is a board of depositories at the Treasurer of State's office or associated with the Treasurer of State's office. And they're the ones that decide which banks and credit unions you can deposit public funds at. And so there's a link on the slide that will take you to that list. And as long as your bank or credit union is on that list, we don't take exception to that in an audit. It would only be if you put money in a bank or a credit union that wasn't on that list would we have an audit issue. So this list is a product of risk assessment that's done at the state level. The state looks at those and recognize that certain banks are more risky than others. And so those risky ones probably don't get approved. They're not on that list. So in this case, the state has instituted policy to safeguard the assets of local governments and put a control in place to create an approved list from which you need to choose from.
There's a question online. Is this resolution to be completed annually?
No, the resolution doesn't need to be completed annually. Once it is designated and they approve that resolution, it's kind of in effect until they want to change banks or amend it somehow, they can just amend that.
You know how often that depository list changes? Maybe something you should like to be alerted.
Yeah, the question in the room was how often do those depositories change and if they need to check that periodically. I don't know that I can ever think of a bank being taken off of the list. I know banks get added to it.
Okay.
So if you're with a rather larger bank in your area and they're on the list, I don't think I'd be too concerned. If it's maybe a smaller local, bank that you use and they're on the list, it probably wouldn't be a good idea to check that every once in a while, once a year as your board of finance is getting together just to make sure it's still on the list. But I don't think too many come off of there. But if that happens, I don't know that we don't get contacted. No one lets us know that, hey, the bank ABC is no longer an approved depository. So I would just keep that in mind as you're checking around. There we go. The fiscal body is going to be responsible for setting the general investment guidelines. So your library board. And that fiscal body is defined in 513.411 as having the meaning in Indiana Code 36126. So, talked about a lot of these definitions and codes, and sometimes you'll look at the definition, it refers you to another code, and that's what happens here. The definition in 513.4.1 shoots you to 36126, and that includes the fiscal or the governing body. So again, that's not necessarily the fiscal body as you determine for DLGF for your budgetary purposes. That's going to be your board. So under the guidelines, it talks about that in 513.9.1. These are the guidelines that are to be followed by your library. They're set locally on what you're going to do. A specific, a specific investment policy is required by Indiana Code 513.9.5.7 if maturity dates are going to be greater than 2 years. And we'll talk about that a little bit more in a few slides. And both of these are going to be considered part of your control environment. So they're already in statute. That's part of your control environment. There are some other code provisions that specifically require your board's involvement. We'll only talk about a couple of those today, but I wanted to give it to you for your later reference. The first one being 513.9.5.3, which talks about interest-bearing deposit accounts. 513.9.5, which is if you're purchasing a CD from a depository that's not been designated by your board. 513.9.3, investment of proceeds from certain capital assets that are greater than $50 million. So I don't know if that applies to anybody in here. And then 513.11 is the investment of in a cash management system.
We have a question online. How often should smaller libraries do deposits? We don't have $500 a week unless it's tag it or lit receipts.
That's a good question. Smaller libraries, it might take you a long time before you ever have checks and cash that total $500. So you would want to institute in those cases some kind of local control, part of your internal controls that maybe is more frequent than waiting on what the statute requires. That just is going to be an additional safeguard for your units. If you want to make it once a week or once every other week, unless you get $500, that wouldn't be anything we would take exception to, but it's probably a good idea, again, to safeguard as part of your controls, even if it's less than $500, kind of safeguarding that money. So the treasurer's job in all this is to make investments of library money subject to the guidelines that are established by Board of Finance. So if you look in 36.12.2.22, it describes the duties of the library fiscal officer and treasurer as being the custodian of funds, safeguarding and accounting for all funds, and then issuing checks, including when you go out and purchase an investment. In 513.7.7, we mentioned some of this a little earlier when we were discussing the Board of Finance. The investment officer shall also make a written report to the library's Board of Finance summarizing your investments during that previous calendar year. So that's part of the statutory requirement for the Board of Finance to have an investment report each year and to review that. And that report needs to contain the name of each of the banks that you're using, the government agency or where you purchased, if it's a T-bill or a CD, the type of investment that you have, or if there's any other person with whom the library money was invested. And again, I think I talked about this a few slides back in 513.9.1. Each fiscal officer, under the guidelines established by the fiscal body, can invest funds held by each in accordance with this chapter. So it gives you the authority to go out and make investments. Well, it would have helped if I advanced the screen, sorry. There, that's what I was talking about, 513.9.1.
Here's a question in mine. If our library uses Trust Indiana, is it acceptable to have a resolution from the board that investment withdrawals do not need to individually go through the treasurer?
I was okay with that question until the end when it said don't need to go through the treasurer. I'm not sure I know what that means. Like, could I make a withdrawal from Trust Indiana and it doesn't go through the treasurer? Or is it maybe meaning the bookkeeper initiates that withdrawal for whatever purposes, maybe at the direction of the treasurer or something? So I don't know if they can give a little more information on that.
Staff initiates withdrawals based on cash flow.
Okay, so the staff is going to initiate withdrawals from Trust Indiana based on cash flows. I probably would recommend you have some controls in place on specific staff members and then reporting to the treasurer after that happens. So if if on Monday you decide that, hey, our cash flow is low and we want to pull some money out of that, you probably have a control in place on how soon you notify the treasurer of that, because it's really the treasurer's responsibility per that statute. So, you know, if the policy was the treasurer says this is okay, as long as I'm notified, you know, within 24 hours or 48 hours or whatever, the treasurer needs to know that, so that the staff isn't, you know, maybe pulling all of that money out or pulling too much money of that out, because that would be up to the treasurer. Okay, let's move on to the type of investments that you're allowed to make under 513.9. 513.9.2 allows you to invest in securities that are backed by the full faith and credit of the United States Treasury, a federal agency, instrumentality, or federal government sponsored enterprise. You can also purchase certain municipal securities. Excuse me. A key provision here is that the investing officer is the legal custodian of any securities. So the investing officer shall accept safekeeping receipts or other reporting from a duly designated depository that has custody of any receipts within a combined capital and surplus of at least $10 million. So that gets a little wordy in that statute. But we know there's some confusion here when you're dealing with investment advisors. And remember when I said before that you won't know what the statute means if you're not sure of what the definition of that is. And that's important here. And to remember that a depository is defined as a financial institution. And that term financial institution is defined in 513.410, and it does not include an investment advisor or wealth management group. So in general, you can invest your monies at either a bank, a savings association, or a state chartered credit union. You're certainly allowed to use an investment advisor, but your securities have to be in the custody of a bank. So as an example, let's say a library wanted to purchase some T-bills from an investment company. However, the way that transaction would occur is the cash for the purchase would need to be sent to the bank, and the bank or the financial institution would then deliver the cash to the investment company after the investment company delivers the T-bill to the bank on behalf of the library. And then the financial institution would be the one to have custody of that T-bill. So in other words, I'm going to pick on Edward Jones just because I have a friend who is a financial planner with Edward Jones. If Edward Jones came in and said, hey, we can earn you some interest if you invest in this, that, and the other, you can certainly do that. You just can't purchase it directly from Edward Jones, and they can't hold it because they're not a bank. It has to flow through a bank. So you would pay the money to a bank that is a designated depository for your library. And that bank would then go with Edward Jones and acquire the investments And Edward Jones would have that investment delivered to the bank, and the bank would keep it. And then the Edward Jones would get your money from the bank. And then you would get a safekeeping receipt from the bank that they had a T-bill in your name in the amount of whatever. So I don't know how often that happens at libraries. It's not anything that I've seen that we've taken a lot of exception to or any comments, but just keep that in mind that you can certainly use an investment advisor. You just can't buy it directly from them. It has to go through a financial institution. Yeah, question in the room?
Todd, so if a financial institution has a wealth management division as a part of their financial institution, does that work?
Yeah, the question in the room was if a bank has their own wealth management group within the bank. I think that would be fine as long as the bank was and not the wealth management group part of it, but I think you'd have to have something to show that the actual bank was the custodian of that and issue you a safekeeping receipt that it was with that you had investment with them. And also remember that it's prohibited to purchase securities on margin or open a securities margin account. And in that statute in 513.99, that's a may not provision, so that you can't do that. You may not do that. In 513.9, 2.5, it does allow you to invest in certain money market mutual funds. You would want to read through the statute pretty closely to make sure that you're aware of all the requirements and the limitations that are in it. Again, the investment has to be made through a depository, which we just talked about. And that portfolio within the money market fund is limited to certain types of investments. So if that's confusing, that may be something to sit down with the attorney that represents the library and go through that with them on what certain types of investments you can have and what other requirements are in that statute. Indiana Code 5-13-9-4 talks about investments in transaction accounts and certificates of deposits or CDs. These are pretty popular, so I'm going to spend some time to talk about some of those. Transaction accounts is a defined term. If you go to 513-424, you'll find that it's defined as a deposit account, except that it doesn't include a CD. So a transaction account is a deposit account, but it's not a CD. If you go to 513-47, you'll find the definition of a deposit account. Transaction accounts include any account that's subject to withdrawal by a negotiable order of withdrawal, unlimited as to the number of withdrawals without penalties. That includes now accounts, so your checking accounts, your passbook savings accounts, money market deposit accounts that you can withdraw from, or any other interest-bearing account that's authorized to be set up and offered by a bank in the course of their bank business. And these do have to be with a designated depository. And you as the investing officer can negotiate any rates and terms. So if you've got a passbook savings account and the bank is paying, 0.01% or whatever they're paying right now, you might be able to negotiate that with them because you're going to put a certain amount in there and maybe they'll do that. But you as the investing officer can negotiate those terms and rates. Certificate of deposit must also be in a designated depository under this statutory section. We're going to talk about it in a second if you go outside your designated depositories, but for right now, under this section, it has to be in one that's designated. You're going to need to obtain quotes from each depository that is designated by your Board of Finance and keep a memorandum of those quotes as documentations that you've complied with that statute step. The CD is supposed to go to the depository that offers the highest rate of interest, but for some reason you decide that's not the best option for your library. You can just explain that in your notes in your memorandums that you keep on when you've acquired the quotes, and just keep that and show that to us during an audit if questions come up. If one of your designated depositories declines or offers interest rates that are just too low compared to other investors, then you can go to other depositories on the approved depository list that we talked about with the Treasurer of State's office. And in order to go outside your designated depositories, we need to look at Indiana Code 5-13-9-5. I have an itchy trigger finger today. I keep skipping slide. So 513-9-5 provides for purchasing CDs from depositories that are not designated for your library. If you do want to purchase a CD from a depository that's not been designated, then the library board can authorize you to do so by resolution. Or they can amend the resolution where they've designated depositories and add this other bank that you want to go to as one of your approved depositories. Either way, make sure you've got the authorization to purchase a CD from a depository. If you do have to have the special authorization to get one from a non-approved or non-designated depository, then you still have to go through the quote process from at least 2 of them. We talked about Trust Indiana a few minutes ago. You are permitted to invest in the local government investment pool under Indiana Code 513-9-1. And there's only one of these, and it's administered by the Treasurer of State, and it's called Trust Indiana. When it's our understanding, this is very liquid. It operates much like a savings account. You have access to that money as you need it, when you need it. It doesn't have a expiration date or a maturity time. If you're not familiar with Trust Indiana, you may want to talk to one of your fellow libraries that maybe is involved in that, so you can learn a little more, or you can always contact the Treasurer of State's office at trustindiana.in.gov. And then once you're there, select the relationship team, and Cindy Barger is the contact person there. So those are the type of investments that we see the most, and there are others that are permitted by statute. So on this slide, I have some of those others listed so you can look them up at your convenience. But again, definitions are important. So check out what restrictions might be in these statutes and what definitions they are. But 513-9-3 is repurchase agreements. When I was out in the field several years ago, those were really popular. I don't know how they are now, if anybody has repurchase agreements that they use, but you can do that. The next one is investment of funds and obligations that are issued, assumed, or guaranteed by the International Bank of Reconstruction and Redevelopment or African Development Bank. That one's not so popular. I don't know that I've ever seen in that one, but it is statutorily permitted. You can invest and reinvest funds or participate in loans or lending securities under 513-9-3.5, and then 513-9-5.3, authorized to invest in interest-bearing deposit accounts, conditions, exemptions from security or pledging requirements. So I mentioned this a little earlier. Your investments are required to have a stated final maturity date of not more than 2 years, unless your library board adopts an investment policy, which allows you to purchase investments that have a maturity date up to 5 years. So no maturity or no investment policy, 2 years is the max. If you have an investment policy, 5 years is the max. And there are certain requirements that you have to be met for your investment policy. It has to be in writing, adopted at a public meeting, have to provide for the investment of public funds with the approval of the investing officer. It's got to provide that the investments must be made in accordance with the article, the 513-9. Might want to note, I don't know if this would happen in a bank, is probably more, or in a library, it's probably more something that a county or a school might, or a larger unit might get into, but it limits the total investments of not to be not more than 25% of the total portfolio of public funds that are invested by the library. And it has to have a start date on which the policy, or it has to state a date on which that policy expires, which can't be more than 4 years down the road. So you take that first year, and then it can't be more than 4 years down the road. So that's where you get your up to 5 years on your maturity for if you have an investment policy. An investing officer may contract with a federally regulated investment advisor or other institutional money manager. However, the ultimate decision and the ultimate responsibility for the investment is going to remain with that investment officer. And sometimes we go too far again. Sorry. Well, oh my gosh. Well, bear with me a second. I'll get back to that. Say 23. Okay, sorry about that. Service charges. We get a lot of questions on service charges, and that's covered in 513.98. You can pay a service charge to the bank. You can do that by a direct charge to your account, or it can be subtracted from the interest that's earned on that investment. So in other words, you would report the net interest in your records, not the amount of the service charge. Because that's permitted by statute, if you do that, if you net it that way, that isn't anything we would take exception to, but I don't think it's the best from an accounting standpoint, because you're kind of, your disbursements aren't totally reflective of that service charge. So it might be better from an accounting standpoint if you received it in your total interest and then had a disbursement on your books of that service charge, and the net would be the same. I mean, you still have the same effect on your ledger. It's just that by statute, you can net that if you want to. Investments should be made in the following manner. So either by fund, or any statute or terms of any bequest, federal, state, or private grant, endowment, or trust makes provisions for investments with the interest to accrue to the benefit of such fund. It can also be made by fund if it's determined that by your board they want to make investments by fund, or you can do by what we call total monies on deposit. And you can do that after you give considerations to the first two methods that I mentioned. So that means, excuse me. So that means if your gift fund if your gift fund has a lot of cash in it and you want to take, let's say, $50,000 from it and buy a CD, that's an investment by fund. You've taken money out of that fund, and traditionally the interest earned on that would go back into that fund. Or if you look at, you've got a whole bunch of money in your checking account, it's made up of all your different funds. You can grab part of that and invest it, and that's what called your total monies on investment. All the total monies you've got, total monies on deposit, sorry. So that's all the money you've got in your checking accounts. You're not really taking money from a specific fund here or there. You've got a bunch in your checking account. You want to buy a CD with part of it. That's the total monies.
I have a question.
Sure.
Does that relate to bond funds?
The question in the room was if that related to bond funds, and
If there's a retainage that's being held by a bank, does the interest have to accrue back to that?
so if you've got retainage that's held by the bank and it's earning interest, where does that interest go?
Mhm.
It probably would go. So the retainage is going to get paid when the project is over.
Mhm.
But any interest earned on that gets paid to you at the end after there's whatever's left over.
Not usually.
Not
Goes
usually.
straight to the contractor, the general contractor, whoever the retainage is, in fact, the account is usually in their name, not even in the library.
Okay. The comment in the room was about if you've got a retainage account, and the interest that's earned on that, it probably stays with that retainage account. A lot of times that retainage account is probably in the name of the contractor or the vendor, or it's not in the name of the library, maybe. If it happens to be in the name of the library, and that's maybe something you need to check on, if you have a retainage account at a bank, and how that interest is handled. If the interest comes to you for whatever reason, or you split it with the contractor or the vendor, your board can designate where that interest would go. If you get any interest from a retainage account, your board can designate where it would go.
There's a question online. Do slides 19 and 20 apply to those of us using Trust Indiana? We are particularly concerned with the final maturity timeframe, 2 to 5 years, and the limit of total investments.
Let me go back to those slides if I don't jump to the end. It's not letting me. So these are the two slides that they asked about and how that applies to Trust Indiana. Because that Trust Indiana is so fluid, it doesn't really have a stated maturity date. So these two slides probably would not apply to Trust Indiana, because there is not a stated maturity. It'd just be like if you had that Trust Indiana money in a savings account. That savings account doesn't have a stated maturity. It's just there for whenever you need it. And it's so liquid that you can just get it whenever. These two slides are more talking about if you have an investment that does have a maturity date, a CD or something like that, it's going to mature at a certain time. It has to be with an investment policy within 5 years, or if you don't have an investment policy, you're limited to the 2 years. Okay, next we're to the posting of interest, and that's actually talked about in 513.96. The general rule is interest would get credited to your operating fund or any other fund that your library board designates. So it kind of goes, piggybacks a little bit off the retainage question that we had just a minute ago. There are some specific rules. Interest that's received on U.S. government funds. There are specific rules on interest from the investments of funds that are controlled by a court order. I don't know that that would happen much in a library, but a county or a city might have something like that. Your bond resolution requirements, and I thought that's where your question was going originally. If you've got bond proceeds and you invest those, where does that interest go? And that would be covered in your bond documents. They're probably very specific on what you do with the interest off if you've invested any of the bond proceeds while you're constructing or whatever. And one thing to remember, that the interest on the investments shouldn't automatically get added to the investment or rolled over. Sometimes we see that somebody buys a CD in 2022 and it's a 1-year CD, and so it earns interest, and they keep rolling that over and over and over and over. And maybe it's 2030 before you cash that out. Well, you've not recorded any of that interest on any of your financial ledgers for all of those years because you've rolled it over. So I'm going to tell you here in a second how you can account for that properly, so that you can take your interest and reinvestment so you can earn interest on your interest. But just don't automatically, when a CD comes due, just let that renew and not do anything with the interest that you've earned for the year or two that you've had that CD.
What if you don't earn much interest?
Yeah, you're not going to earn much interest on it anyway, although they are starting to go up a little bit. A CD may be renewed for an additional term if authorized by the governing board without the original CD being paid by the bank, and then you issuing a warrant for the purchase of a new CD. So in other words, like I just said, you can renew it or without going through the physical activity of the bank cashing it out and writing you a check, and then you deposit it in your bank, and then you turn around and you write a check because you want to buy a new CD. Sometimes when a CD comes due, you may not know if you're ready to reinvest it. So maybe that happens. The bank gives you the money, you deposit it and record it on your ledger. And then maybe it's a month later that you decide you're going to buy another CD. So you would have to go through that process. But if you're just renewing it and going over, you can do that without going through that physical activity of the bank actually giving you a check and all that. But if it's renewed, and this middle bullet point is what I alluded to a second ago, the interest that's due to the library should either be paid to the fiscal officer at each maturity date, or the records show transactions which reflect the true financial condition and the amounts that are invested at all times. And then that bottom bullet point relates to what I said a slide or two ago, that you just don't automatically add the interest to the original deposit without recording it in your record some way. So for example, let's say you had a CD that was $100,000 and it matured today on May the 24th. And that the interest on that CD was $5,000. Well, you can renew that CD for $100,000, but you need to receipt that the $5,000 interest into your records. So in that case, you just want to keep $100,000 invested and take the interest as the maturity and use it for whatever, operating expenses or whatever. You want to be able to have that interest to use. If you want to reinvest that interest, you can. So you could let that CD renew at $105,000 now. So that's now your new principal amount. But if you don't record that interest, your financial ledgers aren't truly reflective of the earned interest in that time period. So you would still want to have, you'd have to show that on your books, and it almost goes through that process I mentioned a minute ago. You would have to show the sale of an investment. So you're taking in $100,000 because that's what your original investment was. You'd have to post the receipt of the $5,000, and then you'd have a disbursement out of $105,000 for that new amount. And I kind of go into that in this slide, that at the time the investments are purchased, you would enter the full cost of the investment. So it's a purchase price. If in that case, if you wanted to reinvest that $105,000, it'd be the purchase price plus the accrued interest, or $105,000 as a disbursement from the funds or the funds from which the investment was made. So if that was a little confusing, feel free to ask a question now, or we'll have a chance for questions here in a few minutes. But I want to remind everybody there is a form to account for your investments. It's an investment register. It's general form number 350. It's a hand posted record. If your computer system has that same information and as a way to maintain a listing or a register of all your investments, you can of course use that. If your system doesn't, you probably should get a copy of General Form 350 and record your investments on it.
There is a question online. If we rolled over a CD last year without going through this process, is there a way to fix it now? Or just wait until it matures and follow this process then?
I would probably wait and just go forward. If it was last year, it could create, some issues in the prior period and getting back in your system if you had a computerized system. So I would just, going forward, I would start doing it the other way.
Can a library board elect to invest more than 25% of their total portfolio, or is that a state limitation?
It's a statutory limitation, and I probably would discuss that with the library's attorney. for a legal interpretation of what they could do in that case. And then I would probably get that in writing from the attorney, and you could keep that with your files if we asked about it during an audit. So the information on this slide is continued from the previous slide, and I think I've kind of gotten ahead of myself a little bit when I've talked about interest in receiving that and how to handle it. One thing I may not have said, that if you've got interest, if you had total monies on deposit that I talked about earlier, one of those investments, that money would go to the operating fund. It says general fund on the slide, so I apologize for that, but it would go to your operating fund unless your board designated another fund. So here's just an illustration or an image of that register of investments that I mentioned. Again, if your system, your accounting system, your computer vendor can provide the same information in maybe a different looking format, or that they have something like it, would have the same information that's on this form, that would not be a problem for us or anything that we take exception to in an audit. If you wanted to create one of these in an Excel spreadsheet, you could do that also, because you can create an exact replica of a prescribed form using computer software. So that's talked about in chapter 1 of the library's manual. So you could, if you wanted to just make up a spreadsheet that looked like this, you could do that.
Would the 25% apply to funds invested at Trust Indiana?
I believe it probably would, but I would get your attorney to, I would ask the attorney that. So during an audit, we're going to review the internal controls that you have in your office. If we note a deficiency in those controls, we'll notify you either verbally in a management letter or a comment in the audit report, depending on the significance of the deficiency or the lack of controls. I will say, if internal controls are lacking, I think almost always that's considered significant. And so that communication will probably be in your audit report that your controls were not sufficient. And we also look for compliance with statute, the uniform compliance guidelines in our library's manual, as well as compliance with any local policies that you have. You're going to be required to, in your annual financial report, show the beginning and ending balances of your investments for each fund. And that information that's entered in the annual financial report gets audited and included as your financial statement. Also gets part of the notes and the schedule of receipts and disbursements and cash and investment balances. So just make sure all that information reconciles to your records. And if you're not familiar where that is, that in the annual reports, in that financial data by fund section. So it's where it shows each fund, the receipts, and there's a beginning investment balance and ending. So in regards to reporting, the following notes to your financial statements are included in the regulatory report format. And in note 1 is the summary of significant accounting policies. And then subsection C in that note is your cash and investment. So that's just a quote from your notes to your financial statements. It's going to say, on the regulatory basis, your investments are stated at cost, and any changes in the fair value of investments are reported as receipts in the year of the sale of investments. So if that change in fair value is going to be as the interest gets added, if you've got a 4-year CD, you're not going to recognize that fair value until later. There's also a note on deposits and investments that gets into your deposits are made in accordance with statute with financial institutions in Indiana. And they should be insured by the FDIC or the Indiana Public Deposit Insurance Fund. And we get a lot of questions about that. I don't know how many people are aware of that, but the FDIC will insure up to $250,000. But the Indiana Public Deposit Insurance Fund insures any balances over that 250 or what the FDIC doesn't cover. So if you've got 500,000, if you've got 600,000 in a bank, FDIC is going to insure that first 250,000, and then the PDIF is going to insure or cover the rest of it. If you have, if you've received any stocks, like somebody's donated stocks, you might have to have a note disclosure on that in your financial statements. And during the course of an audit, that's probably not going to show up very well on your annual financial report because it's just not designed for that. So if you have any stocks that somebody has gifted to the library, you can always get with the two of us or your field examiners during an audit to how you can, if you need to, disclose that in your notes. And for gap units, and that might come into play for some of you that are a component unit of a county or a city. There is a generally accepted standards, GASB number 40 that pertains to investments. And it basically discloses the risks, or it's in addition to what you would do on a cash basis, but it also discloses the risks that are involved and how you've handled them. So there's custodial credit risk, foreign currency risk, interest rate risk, and concentration of credit risk. So if you're not a gap unit, you don't have to worry about that. If you are, the component unit of a gap city or county, there may be some risks with your investments that you have to disclose, and the people that compile those at your primary government, your county or your city, can help you with those, or you can contact our office and we can try to provide some guidance.
There are a couple questions online. Does PDIF insure investments with all financial institutions on the depository list?
It's my understanding, yes, they do. Anything over the 250 that's not covered by the FDIC.
Are these regulations new? We've held more than 25% in Trust Indiana for 12 years, and it has not been written up in any of the audits or remarked upon in submittal of the annual AFR.
I don't believe it's new, and that's in statute, and I think it's been there for a while. It's just probably not something that we have taken exception to or didn't really consider it an audit issue. Not to say that it couldn't be at any time, because I want to let you know what the statute says. Doesn't necessarily mean that we'll write it up in an audit. We test transactions, we do samples, those kind of things, and it may not have been something that just came to our attention during prior audits. I want to wrap up our investment talk just with a slide. And if any of you have noticed in your materials, you should have caught that there's an error on the printed slides. It says cities and towns. It should look like this. It should say Board of Accounts Guidance Library Manual. So the investment policy is talked about in chapter 1 on page 112, and deposits and investments. There's a section in the back of chapter 1 on pages 14 through 17 that talk about accounting for investments. So again, you might make note of that if you printed it out. It should say library manual and not cities and towns. And that's not the only time I did that. So I'll point out some of my other mistakes as we go along. Are there any other questions on investments at this point that anybody might have? All right, well, let's move on to our next discussion, and that's on the topic of the monthly uploads in Gateway and what some of those requirements are. So again, just to refresh you, there's a bank reconcilement to be uploaded monthly, your board minutes, and then what we refer to as a fund report. I'm going to go over those in a little bit, but I want to show you where you can find that information. So once you log into Gateway, You can get to this screen where you can select from either 100R, the annual report, or some of those other things, but where the arrow is the monthly and annual engagement uploads. And when you click on that, you'll see a screen that looks like this that gives you some narrative on what those are and how to upload things and different file types. Below all that narrative on the previous slide is where you'll get to the selecting the group that you want to upload, the file type or what you're uploading, and some of those items. But the reason we're going over this today is because we've noticed there are some units out there, some libraries that are falling behind in uploading. So we wanted to cover some of this again to kind of refresh your memories, and maybe you're new in your library, you're not even aware that you're supposed to be uploading documents. So we wanted to talk about that. And we started when we were researching this, we started in just looking at the board minutes and who had uploaded and who hadn't. So the number of libraries that were missing at least one upload, there were 37 of those. But maybe more significant were the numbers that hadn't done anything at all or had gone a long time without doing one. So there was one library that hadn't uploaded any board minutes since March of 2021. There were two libraries that hadn't done anything since August, and one library through September through December. So I don't know if personnel changed, in the March through December, if that library had a personnel change and they didn't realize they were supposed to be uploading the board minutes or what happened there. But if you look down at the bottom, the number of libraries that hadn't uploaded anything, there were 12 of those.
I have a couple things online. One
Okay.
person said, we do not view Trust Indiana as an investment account. We view it as another bank because of the liquid nature of it.
I would think for your accounting purposes, I wouldn't disagree with that. So like from your reporting, your annual report, if you were to have a GAAP report or your financial statements were on the accrual basis, I would agree that that's almost is as liquid as a savings account, which is almost as liquid as just having that pile of cash in a checking account or even on hand. But for the statutory purposes, that it does talk about it as an investment because they take that money and invest it in certain things. It falls under the 513(9). And that's why there's not really a lot of things that we look at from a compliance standpoint for Trust Indiana, because I would agree it's very liquid. It's not much different than a savings account.
What do you do if a board meeting was canceled for the month?
On your uploads, if a board meeting was canceled for the month, I'm going to show you there in a few slides how you can handle that. So just to go over the board minutes, those approved minutes from your board meetings are required to be uploaded. And when you upload the minutes to the month that the meeting took place, not the month that they were approved. So if you had a meeting in May, they didn't get approved until June for whatever reason. When you upload them, you're going to select May in that area where I showed you a second ago, and I'm going to show you again what that looks like. And for the illustrations for these next couple of slides, I've mentioned in the past, I live in Madison County, so I picked on some of my Madison County libraries to take pictures of what some of their board minutes look like. This is an example, and they are signed copies. That's our preference, is to have the signed copy uploaded. If you come to when the due date is coming up for when these have to be uploaded and they haven't been signed yet, you can upload a draft. And then at whatever time they do get signed, you can replace the drafts that you uploaded with the actual signed copy file. So you can go back and it will write over what was there before, or if not, you have the option to delete it. But either way, that's kind of our preference. You can have board minutes that aren't signed. Don't know of any statutory requirement that your board minutes be signed by anyone, physically signed. So if you don't, we're not going to write you up that your board minutes weren't signed. We might write you up that they weren't approved, because that is required. And like I said on the previous slide, our preference is to have the signed copy. That should probably be part of your controls, but if they're not signed, we're not gonna take great exception to that.
Will SBOA contact those libraries missing uploads?
Well, during an audit, we would. I think the intent in the beginning was that you would get an email from Gateway when the deadline was for a report to be uploaded and it hadn't been uploaded. I'm not sure that's happening, or we wouldn't have, some of the ones that haven't uploaded anything. Mike and I can check on that to see where the Gateway people are with issuing those emails to the submitter to let them know that, hey, this hasn't happened yet. So if you're getting emails from Gateway, like the notices, you might be getting this. If you're not getting them, they may be going into a spam or a junk folder. I don't know if you check those very often, but we have had some people say they're not getting those, and then when they check their junk or their trash folders, they were there.
Who can upload the required monthly reports and board minutes? Does the director have the ability to upload them, or does it need to be the treasurer of the board or someone else?
For the uploading, I believe anyone that has access to Gateway can do the upload. So the read-only access or the submitter access, which the treasurer would have. So I think if the director had read-only access, I believe they can upload those documents. It would not have to be the treasurer.
Out of curiosity, why do we upload the minutes?
We upload the minutes because we use those and the others that we're going to talk about in part of our initial audit testing that we can do before we even show up on site. That helps us. The minutes specifically, we can read through those to get an idea of what's occurred during the audit period. And if there was major construction, let's say you built a whole brand new library, we can, at that point, before we even show up, design some tests, because we know you're going to have construction costs and bids and maybe bond proceeds. And that helps us know that, or anything else that's going on at your library. Maybe there are personnel issues that get mentioned, and not specifics, but maybe we've gone through 4 directors and 2 bookkeepers. That can let us know that maybe we need to design some audit tests around finding out what's going on there.
Is there a time frame where they're late? I just assumed no one was even looking at them.
There is a time frame for when there is a time frame for when these documents are late. I'm going to talk about that in a few slides.
Who is supposed to sign the minutes?
The minutes that are signed would be by the library board.
Some people online are saying the board president and secretary sign them each month.
And that would be fine too. I'm trying to remember in that picture I had if it was just, thought it was maybe the whole board. Yeah, it looks like it's the whole board. If just the president and the secretary sign it, I don't know that we're going to take exception. I know we would look for in the minutes that in the minutes for the following meeting or whenever that the ones in question were approved. Hey, you read those minutes from the prior meeting and the board makes a motion to approve them, and you approve them, or you make a correction or whatever.
Do the board members present at the meeting in which the minutes refer to have to sign, or the members present at the meeting where the minutes are approved? For example, one member was present for May meeting, but not present at June meeting when the minutes were approved.
I don't know from an audit standpoint that it matters. I think I would take the approach, if I was on a library board, I wouldn't sign the minutes for a meeting I wasn't at. Because I would be more or less approving the things that were written there, and I might not know that that was actually what's said or not. But we're not going to check roll calls and see if somebody signed for a meeting they weren't at or anything. It would just be up to what you wanted to do locally, felt comfortable with. All right, when you get to this screen, and I showed it before, it's below the narrative when you get to the upload group. Over on the left side, you're going to select the group or the month. So because we're in May, we're going to assume we're going to upload the April minutes. In this middle section, on the drop down, it gives you the bank reconcilement, the board minutes, the fund report, the different options. So you will select the board minutes. And then over on the right-hand side is the profile, or provide the file type. And someone asked a question earlier about what if you don't have a meeting because they got canceled. You would go in, let's say you didn't have a meeting in April, it got canceled for whatever reason, you go in and click next to no meeting. And that will let Gateway know not to expect an upload for that meeting or for that month. You can also, there in the middle, you're going to have to pick one of these three. I'm not sure if file upload is the default, but you can provide a link. If you have your minutes on your website, you can upload the link to that. And that way we can go to that, we can click on that link and go to your website and see those minutes. I don't know, is there a way I can make this screen bigger?
Yeah, you'd have to change the.
And I can sort of see them.
Yeah, I apologize. It's probably hard for the people in the room to see that. If you've got the printout, I don't know, does that help any? If you have can you enlarge?
That's right, I don't have.
Oh, okay,
I got it.
okay. Yeah, there wasn't, without me getting out of this and I can't even click to the next slide sometimes without jumping to the end. So I would probably mess that up, but. After you've selected the file upload in this case, then you have to tell it which file you're going to upload. And so you would, on this section, you would choose a file. And when you click on choose a file, it should bring up like your desktop or where you have your documents on your computer, and you can select the file that you want to upload. So I don't know how easy it is to see, but highlighted there, the library April minutes. When you click that and hit open, it will show the file name over here right now where it says no file chosen because I hadn't chosen a file. Once you choose one, it will have that file name to let you know you've selected the correct one. And then you just click that submit button. Next, we're going to talk about the bank reconcilements and the bank statement and the outstanding checklist. So I know this part has changed. I'm not sure. I can't remember when it changed or if we discussed or not. It used to just be the bank reconcilement, but now we want included with that the copy of the bank statement and your outstanding checklist. And in looking at last year, there were 24 libraries that were missing at least one upload. And again, we had some that had gaps. So June to December, there were 2 libraries with no uploads of their banks reconcilements. July through December, 2 more. And then March through December, there were 2. And then in total, there were 11 that hadn't uploaded anything. Yes.
You said copies of the cleared checks, and I'm assuming that we can provide the online access during audit to get to those if they're online, because we don't get the cleared checks and the bank statement, and I wouldn't want to put a link to a bank online. So.
Right. The question was about providing images during an audit and the bank statement activity. What we're looking for here is you might have to download your bank statement from your online activity into a PDF. So that would be the front page of the bank statement that shows all the activity, and then all the individuals and the images of the checks. You don't get the images of the checks?
We have to download those. We haven't been uploading those. Those are available online. Several pages. We haven't been including those in the upload to Gateway. They are available online, so I guess we can download those each month.
Yeah, that was part of the change is to get that, and even the outstanding checklist, because it's just more information that we can test before the audit starts. And that's just time that we don't have to bill you. If I've got it, I don't have to sit down next to you and get online and look at it.
Reconcilement. It's just not.
Okay.
There is a question online. Was there clarification on what needs included in the minutes? I heard at a recent meeting, any handouts at the meeting also need included.
I think that's a local decision. There's nothing in the statute that talks about that. The statute on taking the minutes of a meeting says you have to show the date and those who are present and a general memoranda of what occurred during the meeting. And there's a fourth thing that I can't remember, but it's not any handouts or anything. So if you want to include those, you could. But I don't think we wouldn't have any audit issue if you didn't include those things.
Robert, you might also be thinking about when the Archives and Records Administration did their presentation on what needs is in the retention schedule. I think they want handouts that are included in meetings. So that might be what you're thinking of. So.
Someone online says the printed slide number 44 states number of libraries having uploaded new minutes. So it should say.
It should say libraries.
Reconcilement.
Oh,
Or-
yes, those were part of my errors. Thanks for catching those for me. It might also say, yes, it says minutes and it's supposed to say bank reconcilements. And when we get to the fund report, it's going to say minutes again, and it should say fund report. So those were part of my errors I caught when I was going through this today for the third time. I don't have missed it the first two times, but I did.
We have a.
Oh, okay, sure.
Someone says, I've been submitting the bank statement, but not the check images. Did I hear correctly that this should be included?
Yes, the check images, everything as part of that bank statement. So your optical images of your cleared checks are part of the whole bank statement. So yes. And if you haven't done that in the past, I wouldn't go back and re-upload anything. I would just continue from this or go forward and do that. And this slide might help a little bit with that on the bank reconcilement, at least. It's going to show the bank account balance, your deposits in transit, outstanding checks, other reconciling items, any unidentified variances, and it should show that at the bottom it equals your ledger balance. And then to some of the recent questions, your bank statement is going to show that first page, the bank account balance, the beginning entry or the beginning and ending balances, the deposits, those checks that cleared, and the other activity. And then you notice in the asterisk at the bottom that includes all pages of your bank statement. And if you have multiple accounts, if you can run those through a scanner and save it as one big old PDF and upload that, that's fine. You don't have to, if you have 7 bank accounts, you don't have to upload 7 bank state or 7 different files. You can make it all in one file.
There's a question online. What if my bank does not include check images?
If they don't include the check images, obviously you can't upload them, but I would probably contact the bank to see if they can, because those are a public record that needs to be retained. Actually, it should be the front and the back. I know a lot of banks don't do the backs. But the front, the canceled check is a public record that has to be retained. It can't be destroyed unless, it meets the archives agency's schedules and stuff. So I would contact the bank to see if you could get the optical images added to your statement.
I think that's the test numbers that we have to look at to clear your check.
Okay, Mike just mentioned that from his time in the field recently, that's actually one of our audit procedures is to check that your bank statement has the images of all the images of the checks. And I like to point out the back, from an auditing standpoint, the back can be just as important as the front of who's endorsing and when it's clearing and all that stuff. I know a lot of banks don't like to do that. Or they might want to charge you for it, but I would check with the bank and to answer this question about getting those.
If the former finance director did not upload bank statements, should we go back to the date of our last audit and upload each bank statement? We are audited through 2018.
Probably not. Probably wouldn't go back and upload those. I would just start from now. And if you were audited up through 18, we're gonna audit 19, 20, 21, and 22 probably next year. And you can just let the field examiners know that the prior director didn't do that, and you have them for us to look at, but at least we'll have that most recent year or from this point forward to look at. They could if they wanted to. If you wanted to go back and upload all those, you certainly could, but I would say you'd be okay not to if you just went forward.
Someone online commented, you do need those checked images as well because the bank does not retain them for the amount of time that we are required to.
Yeah, that's another thing to consider is the banks will get rid of that stuff a lot sooner than you're really supposed to, so. So the bank statement that we've talked about there, the outstanding checklist is just a list of the checks that haven't cleared that you've used in your reconcilement. And for the bank statements, the upload is the same. You choose your file and you click submit. Then on the fund report, we had 30 libraries that were at least missing one and others that had large gaps. And there were 13 that had not uploaded anything. And again, your documents probably say no board minutes, and it should say fund report there. So there were 13 that hadn't uploaded any fund reports. And when we talk about fund reports, I know that can be confusing sometimes is what we're meaning. Some places call it their fund ledger. It's really a report that shows each of your funds, the balance for the beginning of the month, the receipts for the month, the disbursements for the month, and then the ending balance. And most of your software vendors provide something that in that general format. And if they do, and you can export it as an Excel file and then upload that Excel file, that would be great because that really helps our field staff in looking at it in Excel. They can sort and do different things with it. This is an image of one of the vendors whose name escapes me, but that's what their fund report looks like. Oh, shoot. I don't know why they put the end button right next to the page up button. Okay. This one I know is Banyan. And ABC was the first one. If your system doesn't do anything like that, or if you have manual records, there is a template on the website at that link that you can download an Excel file and type that information in, save it, and upload it. We had a question earlier about the due dates. So I've copied those here. It's generally 6 weeks after the end of the month. So we're in May right now. So May's uploads need to be in Gateway by July the 15th. And if you have any questions about those uploads, I think most of what I've mentioned here are in the user guide. So if you go back to, the beginning, there's a link to the user guides. And the monthly and annual uploads is at the bottom. Then you can click on that and it'll take you to the user guide. They kind of look like this once you get into them. And there is a section on frequently asked questions that probably will help if you have any questions at that point. If you have any technical issues with uploading, you can email our Gateway people at this address and let them know why it's not accepting. Maybe the file is not one that's accepted, or you're having trouble uploading. You can always go there.
Had a couple questions online. To clarify, the board minutes need to be signed. My board signs the register of claims.
They need to sign the register of claims. The board minutes, we would prefer they sign them, but it's not required.
I've noticed that I can't view what has previously been uploaded. A neighboring director was showing me how to view past uploads that are available to her. How might I troubleshoot this?
I would send an email to what you see on the screen to gateway@sba.in.gov, because yes, you should be able to see the files that you've uploaded. All right, the last couple of sections I'm going to go through in our remaining time. There was some newly enacted legislation that I just wanted to point out. I didn't see anything specifically on library activity, but some that pertain to political subdivisions in general. So I've included the statute here. So gosh, the ones online are the 2021 version. So in July 1st, if any of these statutes didn't go into effect when the governor signed them, they'll go into effect July the 1st. And then the legislative services updates that website, the Indiana General Assembly's website, and you can see these statutes there. But the first one, hopefully that doesn't happen in any library board meetings. It's probably for more like schools or small towns. It seems like we have a lot of disruptive board meetings in schools and small towns. So House Bill 1130 added a provision to 514 1.53 that a governing body can take reasonable steps to maintain order. And there are some new provisions in 514 1.5-3.7 about the attendance at a board meeting when a disaster has been declared and members are not required to be present if it would be impractical or it would present an imminent health risk for them to be in attendance. House Bill 1153 had to deals with changes to workers' compensation. So just wanted to point that out if you weren't aware. And Senate Enrolled Act 134. And I don't know if this would apply to many libraries, if any, but all units of government now have to report to the State Board of Accounts any individual employees whose salary is funded in whole or in part from donated money. And they put January 31st in that statute. And this is just my personal look at it. I've not had anybody say anything or we've not talked about it. At least the directors haven't talked about it. But I think that January 31st date might be significant because that's also the date you do your $100 buy, which is your compensation of all your employees. So it may be we may be changing that $100 to indicate if anybody is paid from donated money. We'll obviously go over that in the fall if there are any changes. I did it again. Okay, I will wrap up in the next couple of minutes with some questions that got submitted, and I didn't have time to get those questions in your printed materials. But they are now, they're not in the printed materials I got to Haley. They are on our website. So if you, I'll get them to Haley as well, and she can get them out to you, or you can go to our website and see some of the questions that were submitted, and some of the answers were rather lengthy, so they're not here. But the first question was about keeping an actual receipt book if you keep a desk collection form and you use Square for most of your transactions. And technically the answer is yes, and kind of sort of though. There is a prescribed form number 3, which is the daily record of desk collections. And that's been prescribed as a method of recording the total daily receipts for a public library and any of its branches, if you have any. But because that form is designed to record the daily total, it would be made up then of individual receipts that are collected through the day. And so since you couldn't just use that on your form 3, you would need something else. Now, if Square provides a detailed transaction that you can print off of each receipt during the day, you wouldn't have to issue a receipt necessarily. You might have a customer that wants one if they pay for something with their credit card and you use Square. And then I would say you would have to give them one. But the technical answer is a receipt's supposed to be issued anytime money is received, including Square. But if you didn't, and Square had those detail, and I'm not that familiar with Square, so I don't know if they provide any kind of detailed report on that or not. But if you had that, I think that would be okay not to issue those people a receipt. If somebody paid in cash, you should give them a receipt. Or if you had a cash register and people paid with cash, and you entered it into the cash register, and like at the end of the day, there's a, I think they used to call them a Z tape. I don't know if they even use tape anymore, but there was like a summary at the end of the day that showed the entries. You could keep that, and you wouldn't have to necessarily give someone a receipt unless they really asked for it.
I have a couple of questions online. Does donated money include grants?
Well, the term donated and grants get used interchangeably sometimes. I think when we're thinking of grants, it's something maybe that you've applied for, or, you know, the ARPA money and the CARES money that came out, those are considered grants. Whereas a donation would be if my grandmother passed away and in her will, she left, you know, $20,000 to the local library, that would be a donation. Or if someone just came in and said, I want to write a check, how much would, you know, make an impact? And you write them they write you $1,000 check, that's a donation. I know sometimes what I would consider a donation, I see the word grant, and some of the, like Walmart gave us a grant of $100. Well, it's probably really more of a donation of $100. Grants usually have some kind of agreement, like a grant agreement or something in writing. And whereas a donation wouldn't necessarily.
But if it's not taxpayer money, that would probably still be considered a donation. Like we have a teacher's retirement fund, they give grants, right? They collect those funds and fundraise those for that organization. So that would be
You could use,
taxpayer funding.
yeah, you could use that as a general guide. Her question or her statement was about taxpayer money. You know, usually a grant will involve tax dollars of some kind, whereas some do, right?
Private foundation, they won't tax.
Right. And donation, you know, if someone comes in and writes you a check, that's their personal funds, that's not tax dollars. So I think you could use that as a guide, but you're right. Sometimes that wouldn't always be the case.
Do you have to fill out a report if you have no privately funded employees?
That's a good question. Because the statute, that new statute says that you shall report to the Board of Accounts by January the 31st, any that you had. So we wouldn't know if you just simply forgot to do that, unless you filed something and said we didn't have. That way we would know everyone had considered it and reported it to us. That's why I think it'll become part of the Form 100R, is some kind of indication on there that this person is funded or partially funded.
Yes.
Yeah, or nobody. Like if you don't have, you know, in the uploads, if you don't have a meeting on a particular month, you can check that little circle. Probably something like that on the 100R.
Do you have to have a bank deposit receipt for every day's receipts, or can they be consolidated into one bank deposit receipt when they are deposited?
I think they can be consolidated into one bank deposit receipt. All right, the next question was about resources for first-time library directors. And I probably would first refer them to you, Haley, if the state library has any resources for new directors.
We do have a new director workshop that
Ah.
happens every August.
Okay, every August is a new directors workshop. From the Board of Accounts side, we do have on our website, which is in.gov/SBOA. And then go over to the left side under libraries or political subdivision, select libraries. Look for those manuals and bulletins that I talked about earlier. If your question is more specific than that, you can always email libraries at sboa.in.gov. The next question was, I understand there should be a process for a library to write off bad debt. And what does that mean for a public library? And then the question went into more about never expecting to collect 100% of the fines that were owed to them. And writing off thousands of dollars didn't seem to make much impact. The answer to that question is a library board has the statutory authority to establish fees and rental charges and to assess fines, penalties, and damages for the loss, damage, or failure to return library property. So in a library setting, and like the question acknowledged, you're not going to collect 100% of those amounts that are charged, but they still are owed to the library. And the library has a fiduciary responsibility to collect all money owed to it through all means and procedures authorized by law. And that's a direct quote from our accounting manual. Because through the board is the only way or the only method to assess fines, it would take a board action to decide when and what not to try and collect or to write off. And our library manual prescribes that the board must have a written policy for writing off debt that it considers uncollectible. And that's in chapter 1 on page 1-11. So if there are uncollected amounts and they're written off by board action, that's acceptable as long as there's policy, and we would audit back to that policy during an audit. Next question was about transferring excess funds such as LRF or rainy day. For LRF, the budgeted, that transfer is to be budgeted from your operating fund each year. The board should authorize a transfer when it's ready for that amount to be moved, because there's no set time for that in statute. Now, if you look at our accounting manual, it describes physically writing a check and out of your operating fund and then going to the bank and depositing it and posting it to your LRF. You wouldn't have to do that. You can, obviously, if you want to, but if you just make some kind of book entry after the board approves that, that would be sufficient for us. And while that transfer can be made at any time, we do note in our manual, it's advisable to make that immediately after each tax draw is received, so that you're ensuring that you get it to your LRF fund. And if you do that, the amount can be half of the total amount that's appropriated to the LRF fund for the year. And for transfers to rainy day, it's basically the same process. It would be after the board approves it. You can do it by check if you wanted to, but you wouldn't have to. But the amount would have to be part of what the board approved, and you would just make your book entry to move that from your general fund to your rainy day fund.
Couple more questions online. We get a grant from the Department of Education to finance an after-school tutoring program. All employees of the program are required to be paid through the grant. Am I understanding that would not need to be on the 100R?
Yes, you're understanding that correct, because that is a grant in every sense of the word from our standpoint, and your personnel can be paid through a grant. I think what the statute is looking for is donated money, and who's donating to this community or this political party that's being used to fund certain people. And I doubt that would impact the library ever. But you'll still probably have to report that in some manner.
What to do on gateway uploads for a canceled board meeting?
If your board meeting gets canceled, there is that section where you select what you're uploading, and it says upload a file or upload a link, or there was no meeting. So you can check that, make sure you check the month. So if there was no meeting in April, you can go to select April, and then in the middle section, select the board minutes, and then over on the right is where you would select the button for no meeting that month.
So to confirm, when we purge patron records with fines, we need a policy stating the criteria.
Yes. Either you're going to turn it over to collections, or if it's under $10, the board's going to approve it with no other action, whatever, how you're going to handle that. Next question, since we're now considered a component unit of our fiscal body, it's our understanding that we're going to be audited yearly. And then they had several questions about that. Being a component unit in a public library context means that the library's finances are reported and audited as part of a city or town or county financial statements when that city, town, or county uses GAAP, or generally accepted accounting principles, for their financial record keeping. The Government Accounting Standards Board, or GASB, creates the GAAP accounting reporting standards for state and local governments in the United States. So it's almost certain if you're a component unit, your primary government's going to be audited annually because it's GAAP. The question, and that followed into a follow-up question, will it be audited or will it be an entity that the county hires? Not necessarily. I mean, it won't be a unit that the county hires, with one exception that I'll talk about. The auditors will either be the Board of Accounts or a private examiner that's acting on behalf of the Board of Accounts, as determined by the state examiner through the provisions of Indiana Code 511-124. And then that private examiner has to conform to our guidelines. But here's that one rare exception. Excuse me. If a primary government has opted out of a state Board of Accounts audit that's permitted in 511-124.4, the primary government selects the CPA under the provisions that are found in that statute, 511-124.4. If the opted out unit follows those procedures and the CPA is licensed to practice in Indiana and is qualified to conduct examinations in accordance with government auditing standards adopted by the Board of Accounts, then they are considered approved. So one of those questions had to do with can a firm outside of Indiana be doing the audit? And the answer is yes, as long as they're licensed in Indiana. So like I think Baker Tilly is, I think, out of Chicago, but they're licensed to work in Indiana. So Baker Tilly, for example, could do an audit in that case. The next part of that, will we be responsible for paying for these audits? Audit cost wise, the primary government, that city or town or county, is going to be responsible for their audits. As a component unit, the Board of Accounts is going to look at a couple of things that affect you. We're first going to look at when your last audit was, excuse me, and what bonded debt you might have. If your library has debt that has continuing reporting requirements, you're already probably going to be on a track for an annual audit, or in some rare cases, maybe a biannual audit, because of those reporting requirements. If you've got bonded debt, those bond companies want usually an annual audit to report to their bondholders. We call these non-federal audits, and we add those to our audit schedule, and then the costs for those engagements get billed to the library. But I did want to emphasize, we plan these engagements to have as little work performed as possible in order to reduce the time that's spent, and therefore a reduced time billed and lower costs. Keeping in mind that the audit of the primary government's already going to have taken your financial activity into account, and that's part of what gets billed to that primary government. If you don't have any bonded debt, we'll look at when your last audit was. And if you remember, by statute, we audit based on risk, or at least once every 4 years. If you don't have that bonded debt and it's time for an audit, so you're approaching that 4-year limitation, then we add it to our audit plan as a compliance engagement. That's basically when we come in and audit for compliance with guidelines and certain statutes, like did you do a bank reconciliation each month, where your claim signed, was money deposited when it was supposed to, those kind of things. Those compliance engagements have a reduced budget time for our field examiners to complete that assignment. So a compliance review versus a non-compliance review, our FEs are supposed to get it done in 2 or 3 days, or whatever the budget is for that, which is a lot less than another type of engagement. So that's going to reduce some of those costs, but the library will pay that. And so see, will the Board of Accounts still audit our library? It's the intention of the Board of Accounts to provide an audit for all libraries when they need it, but at least once every 4 years. So if you're getting ready to issue bonds and you need an audit, or you have some other need that requires an audit, and due to time constraints, if we can't do it, we will contract with a private examiner or work with you in order to find a private examiner to have an audit done. So the important thing to remember there is, if you need one, to let us know as early in the year as possible, so we can work it into that audit plan. And if for some reason we can't get to it, like maybe you told us, yesterday that you need one by next week, we probably aren't going to be able to get to that, but we'll work with you to find someone that can do it, or we'll have a private examiner do the audit.
Question.
Yes.
Maybe this was just an anomaly, but nothing precludes the county that is there were a component you developed like hiring a CPA firm to assist them in getting ready for the audit because we were getting audited by Board of Accounts. We had sent it out to a firm. I think we were sending it to, they were based in Louisville. At the same time, we had to upload things to this CPA firm, which were the exact same period, kind of the same things to different portals in a different format. So we were overlapping. Is that an anomaly that normally occur? Because that's a lot of man hours to send the same thing to different groups.
Yeah, the comment in the room was about having a CPA assist in compiling the financial statements or kind of guiding you through, or guiding the primary government, I guess I should say, through preparing those statements versus Board of Accounts or another private examiner auditing those. The people doing the compiling were asking for information. They had to upload to one portal. And then the other firm was doing the audit and they wanted you to upload the same information to another portal. And you're right, the uploading it, that's a lot of time to upload all those. And if you could upload it in one place, that'd probably be great for you. Part of the problem is those private examiners have their own proprietary portals, how they do their audits, the software that they use to do the audits. And so I don't know if it's feasible to get it to one place where they could go get it and pull it in, because their upload function is to their proprietary their data or software or whatever. That's something that we can consider, going forward, because I think this last go around was the first time where that, component unit came into play. And I think a lot of the firms were scrambling, and I know that made it bad for you and the counties as well, or the cities and towns. But that's something we can look at going forward if we couldn't design something where you upload something once and then the compiler could have access to it, or the auditor, if it's Board of Accounts or somebody else, could have access, so you're not uploading things 2 or 3 times.
Another question online. So we will get the yearly audit and then SBOA will also do one every 4 years.
Depending on your debt situation, yes. So your financials will get audited if you're a component unit, probably every year. And then we'll come in at least once every 4 years and at a minimum do that compliance engagement that I mentioned. Well, we'll just audit for certain that you complied with certain things that we look for. Any other questions? All right, well, thank you for your time, and give us a call or shoot us an email if you need us, and I'll turn it over back to Haley for the closing remarks and comments.
Yeah, so just click stop sharing at the top, should be an option. Okay, thank you so much, Todd. Thank you, Mike, for coming in today and sharing all of that information with us. Now we are going to have Jen Clifton, Director of the Library Development Office. She is going to be filling us in on news from the State Library. I'd like to ask the folks in the room, before you leave today, make sure you've signed in for the afternoon session over there, so I know that you'll get your afternoon LEU certificate. All right, Jen, you want to unmute yourself and turn on your camera?
Sure. All right, good afternoon, everyone. Thanks for sticking around for a few minutes for some updates from the State Library. The biggest thing on my mind over this next week is the standards letters that were sent out. We're expecting, if you received one, your waiver request should be due within the next week or so. So please send those in, send me an email, fax me, whatever you have to do to get your response in. We'll be reviewing those at the June 17th ILHB meeting. And then I will follow up with every library to confirm their status. So even if you didn't have any standards issues, you'll receive a letter that says you were in standards. Also related to the annual report responses, Angela Fox has needed to go through and clarify some of the data that was collected this past year. So if you get an email from her, please respond to that with either the affirmation that what you reported was correct or the correction to the data. Info Express renewal is up and running for the next year. That starts July 1st. There was a slight increase in prices, but that was to be expected based on our current contract. So the lowest tier of service went from $300 to $323 for a day of service. We are getting closer to having those 2020 census figures for you in your library district. I know we're almost halfway through 2022, and you know, I think it happened a lot quicker last time, but you know, pandemic and getting the census numbers a little bit later than normal. But our state data coordinator, Katie Springer, has been working with the IBRC on it. So I think she's pretty close. We have a few library districts with really complicated boundaries, so we're working on clearing those up, and then we'll get you all your new populations. We are currently hiring here at the State Library for 3 different positions: a operations coordinator, so basically a building manager, a evergreen training and development support administrator, and then also our applications developer was promoted to head of our technology department. So we're looking for a programmer or applications developer. We have a couple conferences coming up a little bit later this year. The Difference is You conference will be here at the State Library on Friday, September 23rd. And registration will be open in July, and that will be $25 per person. We also have a resource sharing or discovery to delivery conference on October 7th, where we just put out a call for programs. So if you have anything you want to share related to resource sharing, we'd be happy to have you either as a solo presenter on a panel or even just a quick lightning talk. So we'll have registration information for that a little bit later this summer. And then my last announcement, we are having a fun event here. This was originally planned for, I think, March of 2020. It's the State Library Foundation is hosting a History of Brewing in Indiana presentation. So we'll have a tasting, and there will be building tours, and Clay Robinson, who's the founder of Sun King Brewery, will be here for a presentation and Q&A session. So tickets for that are only $20, and the first 100 sold will get a free pint glass when they arrive. So that's all I've got. I'm going to close out.
All right, so I am going to put that LEU request form in the chat one more time. If you already filled that form out this morning and you asked for LEUs for both the morning and afternoon, you don't need to fill it out again. The recordings for this workshop will be available on our LDO workshops page, where you also got your handouts, and those will be available probably by the end of next week when I've had the chance to clean up that closed captioning. If you have any further questions, you can contact us. Otherwise, have a great summer.